In the comments section of my last video, I was asked to do somewhat of a review of Pilbara, one of our domestic lithium stocks. To some degree, I've already looked at that phenomena in a video I did in April last year. But upon review, it is worth looking at Pilbara because it does teach us a lesson about the notion of moving on. But as often is my approach, I start with a quote. Come for the trading, stay for the history lesson. This is a quote by Abraham Lincoln, which he gave at the Wisconsin State Fair in 1859. And he uses the Persian phrase, and this too shall pass. This is very much the theme of this video. All things in markets pass, therefore our attachment to them must also pass. The issue we are considering is this notion of legacy trends, things that occurred in the past that we want to repeat again in the future. But we need to understand that the market moves on, cycles change, interests change, trends alter, and if we cling to those thinking that the past will repeat itself in a clockwork mechanism, then we are going to cost ourselves money both directly but also indirectly, as we will see at the end. In the video I produced in April last year, I noted this little table, and it's a table of the 2-year performance from the date the video was released of a series of domestic lithium stocks. And as you can see, in the previous 2 years, they had quite remarkable performance. In fact, the little lithium boom we had was probably the last true bull market or secular bull market that we have had in Australia. I then looked at these through the lens of what they'd done year to date, and this is what I see. Outside of Vulcan, they're all dogs. And you can see that Pilbara's return to date is a decline of 23.5%. So if we're to look at Pilbara, this is Pilbara going back almost 5 years. We always start with a chart like this, with nothing on it, because it gives us a sense of where price has been. It gives us an idea of what the overall look of price has been. The unfortunate tendency of people when they look at charts of any sort is to jam themselves up against the hard right-hand edge and stare at it much like a 2-year-old watching TV from a few centimetres away from the screen. That's not how you get a sense of what is happening. When I look at Pilbara, I see 2 distinct sections to the chart. The first is where the money is made, and the second is where the money is not made. And it is a clear delineation, and I will explain why I see that delineation in a few minutes. If I was to look at Pilbara from the historical lens of trading, the clear initial signal for Pilbara is this breakout that occurred towards the end of 2020. This breakout was a common feature in these sorts of stocks at that time, so this is a sector-wide move. It is very strong and it involved a lot of stocks. But the thing we note is that when we look at this uptrend, it shows the clear formation of a series of higher and higher highs. Each time price reaches a high, falls back, congests, it moves on from that high and makes another one. When we look at the situation post-2023, we see something different. We see literally the reverse. Price is making a series of lower highs. It does not defeat any of the previous highs. Price continues to drift backwards, and as we can see, it has dropped through that very large and extended band of congestion towards the bottom that we had there. The other thing to note, and this is the thing that to me conveys weakness, it is this notion that these bullish gaps are quickly filled within a session or two. They have no continuity, they don't move on. This is a bearish sign, it is not a bullish sign. If you get a bullish gap that is very quickly filled, it's telling you something about the underlying psychology of the people involved in the trend. And their underlying psychology is they are uncomfortable, if I could use that phrase, with prices being pushed higher. So the gap collapses. The rule for this is simple. You trade in the direction of the collapse. Failed gaps are not a signal to go long in this situation. In fact, they're telling you something. They're telling you something about the way people feel about this particular stock. What is occurring here in 2023 is not what was occurring towards the end of 2020 and throughout 2021. Times have changed. We have to, in part, ask the question as to why has it changed? And the answer to that is somewhat simple and does appear simplistic. But we are talking about a domestic miner. We're talking about a domestic miner with a connection to a particular commodity that was engaged in a wave of bullish speculation. So when we do something very simple and we overlay the price of lithium over Pilbara, we get this. The thing to note is the general shape. And the general shape is that when lithium went up, Pilbara went up. When lithium goes down, Pilbara goes down, because there is no impetus, there is no desire of people, nor any reason for them to be involved. Yes, you will get the occasional little speculative bit of fervour, but that's noise within the signal. The signal was in 2020, 2021. Now we are engaged in noise. Noise is profoundly unprofitable. Yes, I understand that noise is very good for entertainment and it makes people feel they're part of the action. But it is simply noise, it is not signal. To some degree, we come back to the notion that you can make trading as hard as you want or as easy as you want. Unfortunately, because we are human, we have this desire to make it as hard as possible when it does not need to be that way. The simple rule you could generate from this is that when the price of lithium is going down, you put lithium stocks in the bottom drawer and you leave them there. This does raise the question of, is it over, and how to tell it is over beyond what we've already spoken about. I am a fan of very simple things. I do not feel there is any currency to be gained by making trading very complex or very difficult, because it is not a complex field. I do understand, as I said before, there are people who desperately want to make it hard. They tend to do so for simple psychological reasons. They want to either prove to themselves how clever they think they are, or they want to try and prove to others how clever they think they are. It revolves around an issue of ego. Whenever I look at a chart, this is the first thing I see. And if I'm a long-side investor, as you are with equities generally, I ask the simple question, is there more green than red? So I put up a chart, I walk to the back of my office, I turn around and I look at it, and I should be able to instantly see whether there is more green than red. If there is not a clear delineation between the two, then my interpretation of that is one of noise, not signal, and so move on. And we loop back to the notion that you can move on because markets are profoundly generous. Markets will present an infinite number of opportunities to you right up until the day you pop your clogs. There are some mechanical measures we can use. On this chart, I've simply dropped over new 52-week highs and lows. What you can see is a clear delineation. During the period in which Pilbara was running, it made new 52-week highs and no new 52-week lows. Post-2023, it has not made a new 52-week high, but it keeps throwing up these 52-week lows. It's telling you a story. You just have to listen to the story. Or you could use some long-term trend filter, such as you see down the bottom plotted as a ribbon. It doesn't matter what this is, so long as it looks at the long-term trend and keeps you oriented in the right direction. My view is that with these legacy boom stocks, once it's over, it's probably over for good. That doesn't mean we won't have another lithium boom, but when we do, the actors will be different. The players will be different. Yes, some of these older companies that participated in the boom 4 years ago, let me put that in context, 4 years ago, may participate, but markets throw up new actors. I do understand that people don't like to be told that their baby is ugly, but in trading sometimes you have to tell people that their baby has a gob like a smashed crab, and to get over it. There are two consequences of this being hooked on legacy trends. The first is what you cost yourself directly by being oriented in the wrong direction in the wrong stock. The second is perhaps more important in that what you do is you miss out on current movement and current trends. This is a list of the best performing stocks on the ASX year to date. If you are constantly looking back at what was, you can't look forward at what is. As such, these opportunities are denied to you because you are blind to them. The thing to realise is that when you fall in love with a stock or a sector or an idea, that love is not reciprocated. In that respect, this is the ultimate abusive relationship. It is one-sided completely. You have this attachment to something that keeps taking money off you but never reciprocates. You need to actually move on from that and look at the market as it is, not as you want it to be.